An annuity's primary purpose is to distribute a sum of money, through periodic income payments, for a specified period. There are a variety of ways, called settlement options, to distribute these payments. Deferred annuity owners may select and change their preferred settlement option anytime prior to annuitization. However, once annuitized, an annuity settlement option cannot be changed. Annuity income payments are typically made monthly, though other modes, for example, quarterly or annually, are possible. Like those of life insurance death benefits, annuity settlement options are separated into two categories, those with a life contingency and those without. Only life insurance companies, with their experience working with interest and mortality, can offer settlement options with a life contingency. Please pause the audio and review the table. Settlement options with life contingency. Every option with a life contingency features a different payment guarantee, but they all have one important thing in common: income payments the annuitant cannot outlive. For this reason, annuity settlement options with a life contingency are generally called life income payment options. The most common life income payment options are straight life income, also referred to as pure life income, life income with refund guarantee, life income with period certain, joint life income, straight life income. Under a straight life income option, income payments are made for the annuitant's lifetime. Payments cease at the annuitant's death, even if that occurs shortly after the start of income payments. Because it provides no minimum payment guarantees, the straight life income option provides the largest monthly income payment of all the life income options. Life income with refund guarantee. A life income with refund guarantee settlement option pays the annuitant an income for life and refunds money if the annuitant dies early. If the annuitant dies before the sum of total income payments equals the annuitized sum, the net difference is paid to the designated beneficiary. This may be in the form of a lump sum cash payment or as continuing monthly installment payments until the balance is zero. Example: upon annuitizing $50,000, Jerry selected a life annuity with refund guarantee option, which pays him $375 per month. If Jerry dies after 7 years, after receiving $31,500 in payments, his beneficiary will receive a refund of $18,500, payable either as a lump sum or the continuation of payments for 3 more years. If Jerry dies after a total of $50,000 has been paid, no refunds will be owed. Life income with period, term, certain guarantee. The life income with period, or term, certain option guarantees that income will be paid for the annuitant's life, but no less than for a certain number of years. If the annuitant dies before the term period ends, then income payments continue to his or her beneficiary for the balance of the period. The guaranteed period can be anything the annuitant chooses, and the insurer agrees to, with 10, 15, and 20 years being the most common. Joint life income option. Annuitized payments can be designed to extend over more than one life. Generally called joint life income options, there are 2 common types: joint and survivor, J&S, and joint life. Joint and survivor option. Under the joint and survivor life income option, an income is paid until the second of the 2 annuitants dies. Joint and survivor options are popular with couples who want to assure a continued income stream for as long as either partner lives. The income paid to the surviving annuitant after the death of the first may continue at the same or a reduced level. Common options include joint and 100% survivor. This option pays a monthly sum to 2 people. Upon the death of the first, monthly payments to the survivor continue with no reduction in the amount. Joint and 2/3 survivor. The survivor's income is reduced to 2/3 of the original amount. Joint and 1/2 survivor. The survivor's income is reduced to 1/2 of the original amount. Example: with the J&S option, a higher survivor's percentage will result in a lower initial joint benefit amount. For example, annuitizing $200,000 might result in the following options: joint and 100% survivor, $1,000 per month to joint payees and $1,000 per month to the surviving payee. Joint and 2/3 survivor, $1,200 per month to joint payees and $800 per month to survivor. Joint and one-half survivor, $1,400 per month to joint payees and $700 per month to survivor. Joint and survivor with period certain. A joint and survivor settlement option can also include a period certain guarantee. Income will be paid for as long as either annuitant is alive but for no less than a certain period. Joint life option. A variation on the joint and last survivor payment option is the joint life annuity option. Under this option, income is paid to two annuitants until the first one dies. All payments end at that point. This is not a common option. Annuity settlement options without life contingency. If annuity income payments are desired only for a specific period of time, a period certain only option may be more suitable. Because they do not include a life contingency, period certain only options generally provide larger payments than life income options. There are two common types of period certain only settlement options. Fixed period option. Fixed amount option. Fixed period option. Under a fixed period option, payments are made for a specified number of years and then end. The size of each payment depends on the amount of money that was annuitized and the length of the fixed period, with longer periods yielding smaller payments. If the annuitant dies during the period, income continues to the beneficiary for the remainder of that period. Fixed amount option. Under a fixed amount option, payments are made in an amount selected by the annuitant for as long as it takes to liquidate the annuitized principal. If the owner dies before the principal reaches zero, payments continue to a beneficiary until the principal is entirely liquidated. For your review, annuity income payment options are similar to life insurance death benefit settlement options. Once an annuity is annuitized, it is not possible to change the annuitant or the payment option. Like life insurance death benefit settlement options, annuity payment options are separated into those with a life contingency and those without. Annuity income options that include a life contingency guarantee payments for as long as the annuitant lives. Annuity income options without a life contingency make payments for a specified period of time only. Because they do not guarantee a minimum number of payments, the straight life income option provides the largest monthly income payment of all life contingency income options. A joint and survivor life income option pays income until the second, survivor, annuitant dies, while a joint life income option pays benefits only until the first annuitant dies. Annuity payment options without a life contingency include the fixed period option and the fixed amount option. Please
All life insurance death benefit settlement options. Annuity payment options are actuarially equivalent, which simply means that even though the amount of money paid out, depending on the option, appears different, the value of that payout option offsets the difference so that to the insurance company, they are actuarially equivalent or mathematically equivalent in value. Now, the lesson talks about a variety of options. I just want to take a moment to make a couple of general observations. Number one, when we talk about annuity payment options, we use the term life contingency to distinguish an annuity that pays income for the life of the annuitant, as opposed to what we call a period certain annuity, which pays an annuity payment for a certain period of time, irrespective of whether the annuitant is alive or not. Some annuities combine them. A life annuity with period certain, as the lesson describes, includes a minimum period guarantee that income will be paid out, and the guarantee that should the annuitant survive that period certain, payments will continue. So in the area of life contingency annuities, that is an annuity payment option that pays income for the life of the annuitant, the vanilla option, if you will, or the option that will provide the most money with the fewest frills is the straight life option, which simply says income will be paid to the annuitant as long as the annuitant lives, and when the annuitant dies, all bets are off. If the annuitant dies in 6 months, I guess you could say the insurance company wins. On the other hand, if the annuitant turns out to be Methuselah and lives, way past their life expectancy, they win. That's a risk that everybody takes when they select a life contingency option. That's why most annuitants select an option that includes some kind of a guarantee feature in it. Examples include, we already mentioned, the straight life and period certain. Another popular one is the joint life or joint and survivor annuity option. This is especially attractive with spouses. One spouse dies, the other one doesn't want to be left high and dry, so they'll select a joint and survivor option, which continues annuity payments for both lives or joint lives and cease only when the second person dies. Options here include the 100% joint survivor, which simply means the same income amount is going to be paid when the first annuitant dies. 50% joint survivor is one in which the income amount decreases 50% upon the death of the first annuitant, and so forth. Keep in mind the point we made in the very beginning. They are all actuarially equivalent. So the more valuable the option appears, the less income is going to be paid through that option. Going back to our quick example here, a 100% joint survivor option is going to pay less monthly income than a 50% joint survivor because it has that added value of no reduction when the first annuitant dies.
Okay, all. This is the 4 questions for this lesson. Grace annuity pays her income for a lifetime regardless of how she lives. When she dies, no further payments are made. Which type of settlement options does she have? I don't know the right answers to these. I was going to do these questions live in the future, so if this kind of thing interests you, be sure to comment, because if I get enough comments, I'll do this live. If not, we'll just continue the way it is. These questions are similar to the ones that should be on your test. I do not have a copy of the right answers. I'm just guessing along as I go on here. Which of the following annuity settlement options best suits 2 spouses who want to make payments? Will continue for as long as they either are alive, no matter which of them dies first. Which options? Joint life income options, maybe? I would say joint. No matter joint and survivor. Under which annuity settlement option are payments made for as long as it takes to liquidate the annuity principal, at which point payments terminate whether or not the annuitant is still alive. I want to say fixed amount. Which annuity settlement option pays incomes for the annuitant's life but no less for a specified number of years? And I'm going to say straight life or pure. All right, I got half of these right. So the first one, which settlement options does she have, is straight, pure, or life. Okay, so that's regardless of how long she lives, annuitized payments can be designated to extend more than one life. This type of payment option is called joint and survivor life income option. Under this option, an income is paid until the second of the 2 annuitants dies. The second one is joint and survivor option, which I actually got correct. The income is paid until the second of the 2 annuitants die. When the second annuitants die, no further payments are made to anybody. And this is common for married couples who want to assure continued income streams for both of their lives. So the next one was the fixed amount option, which is income payments under a fixed amount option are made as long as it takes to liquefy the annuity principal. And the contract owner chooses a monthly amount, and the insurance company pays the amount every month until the principal is liquidated. The next one was a life income with period certain. And this is under a straight or pure line income. The annuitant receives an income for his or her lifetime, regardless of how the owner lives. When the owner dies, no further payments are made to anybody. So that's not the correct answer. With annuity settlement pays for the annuitant's life, and not more than a specified number of years, is a life income with certain period. Okay? So these are some of the questions that are important for the tests that you're going to take if you want to become an insurance agent. We're going to go over fixed annuities next. If you need help, you just be sure to rewatch it again. Be sure to subscribe and like and all that stuff. I appreciate it. And I will see you in the next video.